What's going on, everybody? It's February 29th, 2024. Daily log episode over at NQ. Live stream review. So if you guys were in attendance today, I took a loss this morning. So based off of where I left off on the live stream, I was still anticipating higher prices. We had a really big drop lower that I posted about on Twitter, where I said I may want to look for the sell side. I didn't engage in anything else. Truthfully, I didn't engage in anything else. I took that one trade today. I will show the track record for this month. I've also posted on Twitter so far, but I didn't engage in anything else today because I honestly probably would have got something wrong. To be completely honest with you, I think today was pretty highly manipulated, at least in my eyes. Again, this is my personal opinion and experience off of 6 years, but based off of this week and even this year, it's been decently difficult to trade it. I'm not going to sit here and say it's been easy. I'm also not a person to make excuses, but even our own mentor has stated the exact same thing. And does that mean that the market's broken? Does that mean that the model's broken? No. It just means that we're in a time where either the markets are being held, they're being manually basically intervened / manipulated. And that's the way I'm viewing it. If you look at dollar index, it's a very clear interpretation of what I'm trying to get at here. And the dollar index, bonds and yields, I know I haven't talked about it in a little bit, but these are major catalysts for good trading environments. And this is what I'm trying to get at in terms of price being held, right? Even though NQ has moved in some significant manner, the price runs are not as frequent / clean and precise. My entry patterns and models are not happening as frequent as they usually do in a very clean, symmetrical market. And if you don't have experience, especially many years of experience, you're not going to relate to this. You're not going to understand it. And I'm just trying to describe the idea of basically what's been happening this year. And this can be due to various reasons. And ICT's discussed basically tinfoil, quote unquote, reasons for that and where we could likely lead this year. And you have to be very nimble. You have to be very careful. And the only reason I'm saying this is because if you're finding it difficult, it's okay. It's normal. But the thing that is not okay is to be upping your frequency and upping your risk in how many times you're getting engaged with the market. If you watch me this week, I've engaged 3 times so far this week. And basically once yesterday, which was during one session, I took 2 trades, and then today one trade. And that's it so far. Basically every week, I've compared to what I normally do, I'm engaging a lot less because I'm respecting the risk. I'm respecting my own faults and things I'm probably going to misread in this type of environment. And if you look at dollar index, what I'm trying to get at here is look at since the start of this year, consolidation, slight move higher, consolidation, slight move higher, consolidation, slight move higher, consolidation. Look at the wicks, look at the delivery of the daily time frame. Even leading up from last year, I mean, we haven't got any really clean price runs. Even all of last year was not particularly clean. If you look at the years before, or like look at 2022, 21, look at the delivery of price and the expansion, the one-sided delivery that price had. I'm not saying this is going to happen all the time, but if you want to be in a good environment, you want to be trading inside of something that is not as difficult, it would be preferably in something like this. Obviously, we can't do that. We can't force the market to do anything, but I want you all to be aware of what is happening. And if you've have had a great time, you've had amazing experience, you've been rolling in profits, well, congratulations to you. That's awesome. I'm not saying that you can't be profitable in these conditions. I have myself, but you have to be respecting the risk and respecting the level of manipulation that is undergoing. I mean, again, looking at bonds, looking at yields, they're still really not moving in a very clear one-sided fashion. And when you're in markets that are like that, it's a really good sign. So when you look at NQ, even though we've had some decent delivery in terms of movement on NQ, lower time frame entries and the patterns that are forming are heavily manipulated. And it's difficult to get inside of the market without having to be either stopped out on a trade idea that is usually probably valid in a good environment, or you're having to sit through a lot of consolidation chop for a few days. And you saw this week where Monday, Tuesday, even Wednesday was all basically consolidation. Today we had an expansion higher, but it was pretty highly manipulated. If through my eyes, today's move higher, even though that's what I was seeking the whole day, at least in the morning, it was a manipulated move higher. It was hard for a lot of people to at least get long in today. And in my eyes, I don't think many people were able to capture that. Even myself, I wasn't able to. And I would probably agree ICT would say the same thing. So I'm just trying to normalize the idea that it's okay in these environments. I'm not trying to make any excuses, but you have to point out the reality, right? I have to point out that for a newer student, if you're having a tough time, it's okay. It's normal. So looking at least the daily time frame from here, we closed above yesterday's down close candle. That creates a bullish order block. I think the buy side is going to be taken before we can utilize that bullish order block. Going into tomorrow, you have to keep in mind of this new monthly candle that just formed. So look at the closure of today and then the new monthly open. So let's just say, I can't say too much on a first day. It's going to be a wild price action tomorrow. That's all I can say, especially on a monthly open. You're going to have a very wild price action type of day. Typically, it would be something that you should sit out. I would advise sitting out of a new monthly open candle, but just study it. Going into this month, I don't know. There's not enough information for me to make a decision, but let's just say on the analysis that I'd be looking for lower prices, that I'd be looking at power 3, which is you're looking for the open to expand higher in the opposite direction of wherever it's going to close. So you'd expect the manipulation higher first, and then you'd have a down close candle moving lower. And that very well could happen. We could keep going off higher. So there's just too little of information here. Looking at the weekly candle and where we're at, I believe tomorrow, or even overnight, or even here shortly throughout Asian, we've moved a lot. That previous week high is going to be taken. And I'm going to lean on the idea going into tomorrow. I'm going to look for a TGIF scenario to play out. That would be cool to see. Same thing as last week where I took the perfect TGIF short Fridays, setup template. You're looking for the 20 to 30% back into the weekly range. So wherever the high forms by the time I get into AM session or during the AM session, wherever I believe the high is, then I'm going to be looking for a retracement back into the weekly range by 20 to 30%. I'd be resting in the higher portions of that fib there. So for those who don't know what that is. So that's what I'll be anticipating tomorrow. It may not have TGIF. We may just keep expanding higher. And that's where you as the analyst, you have to judge and weigh the decisions and the options of what price is doing. Looking at the 4-hour chart in here, we dropped down into, that was the daily BISI. So CE was met perfectly on the daily BISI. Refine that into the 4-hour. And I was talking about all week throughout even the weekly forecast. If we were going to expand higher, and I talked about this yesterday, I wanted to see these lower fair value gaps to be left open. So why would I want that to be left open? If you've had a large expansion and prices in a hurry to get somewhere, you want to see the lower portions, basically a discount level fair value gaps to be left open. So if you pulled a fib from that swing low up to the high, equilibrium is resting here. My old self would want discount to be reached before I'd be looking for longs. But you have to anticipate when you're in a very bullish market, you have to anticipate breakaway gaps. You have to anticipate those and you have to say, all right, well, these would be preferred, to be left open and this to be respected. Because you see the delivery of this, it's in a hurry to get somewhere. So you would anticipate those as breakaway and you wouldn't anticipate the discount to be reached into. So buy side is going to be reached into, I believe, overnight or here shortly. I don't know when. If you look at this morning's price action going into the open, I was annotating the buy side liquidity levels here, and these were taken out with the open basically. And I was anticipating just a small retracement and then a continue move higher. And that's what I was doing. I was taking a stab in the long when we were down here to continue higher like we did here. But to me, this is what I mean by manipulated. I can't anticipate this. Is not normal. Whatever, anybody can have their own personalized opinion, but I have 6 years of experience doing this. That's not a normal retracement is really what I'm getting at. That's not a normal retracement lower. That level of manipulation lower is crazy. And I can't see that. I can't anticipate that. It's something where it's basically like a blind side. Like, wow, I didn't see that coming. Even somebody with 6 years, it's not a lot of years or experience, but it is something. And I typically don't anticipate something like that, especially like I just mentioned, if price is in a hurry to get somewhere, I'm anticipating IOFED, institutional order full entry drill. I'm anticipating just a small stab into the inefficiency and then a run higher. I'm not anticipating this huge drop lower. I mean, that's a full, basically 100% retracement, then price rallies higher. I mean, it's crazy what the level of manipulation is happening. It's the only thing words I can find. But I annotated going into the open that these levels should be traded into. Even yesterday, I believe I mentioned these levels. Overnight, we dropped down taking out sell side, and then the news event driver 1 hour before the open, we displaced higher. So I was grabbing your attention to look at the lows in here with ES and YM, where YM failed to make the lower low and ES and NQ both made the lower low. So that is a bullish S&P. You're combining higher time frame narrative, which is bullish. You're inside of the bullish daily inefficiency. So it was fairly easy reads for me to anticipate higher prices. I was talking about this all day on live. It's like I can't abandon the idea of looking for higher prices because that's what the narrative is stating. It's the reason why I took a long today and I got stopped out. So I'm not upset. I'm not mad about it. It's just, again, I can't anticipate the level of manipulation that is happening. So I have to just respect it, and I have to reduce my risk and the frequency that I engage with the market, because I can't, arm wrestle or strongman this type of environment. It's going to get me hurt. So I would like to believe in a different environment. You can choose to believe this or not, but through experience, in a different environment, in a different setting and time, where things may be a little bit less manipulated, in a bit of a better environment, all that would have happened was a simple IOFED into these inefficiencies here. That 1 hour, the 30-minute, the 15-minute, even the 5-minute, this large inefficiency. Price would have simply IOFED'd it. And then the lower time frames, I was waiting for a displacement higher. I was waiting for a entry model to form, which I executed on to target the buy side, which was resting above the highs here. And then I was looking for what? The CE of the 1 hour wick. So I don't have it annotated in here, but there's a 1 hour wick, the CE. If you mark that out and extend it to your right, we basically tagged it on the head there. And that was right at the close of the day. So in here, today, even though we moved a lot, I could barely see where somebody could very well hurt themselves. I mean, these type of days, it's easy in hindsight to look at it and go, oh, well, yeah, all you have to do is wait for a nice deep retracement. You go long in here and you target buy side. Backtesting will poison your mind into believing that these things are possible. But in real time, things are a lot different, right? So even in here, we dropped all the way down into this deep, deep discount. It's just through experience, this is not what I'm anticipating. It's just not. And I'm very transparent and blatant with you. That's not what I'm anticipating. But in here, during the session, we dropped down into this inefficiency here, the 1 hour. During this moment in time, what I'm anticipating is just a rally higher from here. I'm not anticipating a drop lower. And I was annotating the 1 hour, or the 5-minute inefficiency in the 1 minute, which was residing here. Basically, what I was waiting for was to see if we were going to utilize this to drop lower. And I was being very cautious. I was being very, very patient. I thought I did a really great job, probably up until the end. Honestly, in hindsight, I wouldn't say I FOMO'd in the position, but I definitely could have waited for this to be closed above to take the position, because I was weary of the idea. So in here, I was annotating the 5-minute SIBI and this 1 minute. I was being very, very patient with it because things just didn't seem entirely right to me. And I was annotating a few inefficiencies in here. I will refine them, but there is this inefficiency here, this inversion there. And even to make note during the live session, during the open, even going into the silver bullet, I was annotating how a few of these inefficiencies, especially if you're on a 1 minute, you easily could have seen this as a long opportunity here. And there's nothing wrong with that. But if you were to look for the buy side, you would have probably been stopped at a break even or only been able to pull off a partial. And even in here, a lot of people were looking at this as a potential long area. And I was describing the idea where if we have expanded a lot prior to the open, I'd much prefer a retracement lower, taking out sell side, and then price to rally higher. That is what I'm looking at. to target the clean level of buy side liquidity, which is here. So in here, there's a BISI, price reacted off of it. And basically what I'm doing is I'm waiting for price to see, this is where I messed up on my entry personally. And I could give my reason why I took it. It really had to do with time. But in here, I was waiting to see if we can get above the inversion. And we weren't, so I didn't elect to take anything. Price dropped back down into this inversion and this reclaimed BISI here. And then price displaced higher. So to me, what I was anticipating, well, all it was really doing was taking out sell side, returning back into here, and we're moving into the end of the silver bullet macro. So I see this huge, large displacement going into time, which is an important factor. So when I see that, and I see this inefficiency here, and my bias is bullish, we moved into the higher time frame inefficiency, which was the 1 hour. We ILFED'd it here, took out sell side, dropped lower, take out internal sell side here, displace higher, leaving the fair value gap with an inversion there. What I'm anticipating from that run is basically, all right, well, we should drop down into this and we should displace higher into the buy side paired with time. That's really the main reason why I took the trade, because if this was outside of this, if this happened anywhere outside of the silver bullet, I probably wouldn't have taken it. I would have waited for the closure above the SIBI and waited for this to turn into an inversion. But paired with time, I was kind of keying off the idea, well, if we're moving into the silver bullet macro, price really hasn't moved much throughout the session. We've had a decent energetic displacement higher. Price should dip down into this and displace higher into the buy side. And ultimately, the idea was wrong. And basically, if I put the position on, I was stopped out about 15 handles. I actually posted on Twitter I was stopped out 20, but in all reality, it was actually 15 if I looked at it. I believe it's a different, is it this one? I don't know. Oh, I got to go out of replay mode. But you get the point, right? And that's just where sometimes you're not going to be able to see certain losses. You execute on a model, you execute on the narrative, you follow the time and the rules, the things set out for you, and you take a loss. And that's normal. That's a normal part of trading. The main part that you want to key off is, okay, what did I do after? I didn't go back into the market. I didn't engage with the market again. I could have seen a lot of opportunities where I could have got back into the market, made back money, made back the loss, etc. But knowing the environment, knowing the level of manipulation in here, when this sold off, I could have easily started looking for shorts, switched my bias, got stopped out on shorts. Going for longs, I mean, I could have made a complete mess out of today. And I was weary of the idea of how much level of manipulation was undergoing that. I'm going to probably make some mistakes. I know I'm always one step away from screwing everything up. I know myself very well that I'm not perfect. I'm nowhere near what people think I am. Let me say this in a different way. Yes, I have a great level of discipline and patience, but if you see the side of me where I hold a lot of the things back from coming out, it takes a great deal of patience and discipline to keep that side of me from ever coming out. Because if that side of me came out, I would wreck myself terribly. I've seen it. I've done it. We all know what it looks like personally, but you have to keep those demons and those things, those faulties at bay. You have to constantly monitor it because you're your number one enemy. You're your number one competitor. If you have to just exit away from the markets, no matter how much price is moving, it's the number one thing that'll keep me away from making mistakes, especially after a loss. And when price is moving like this, I just have to move away from the charts. I have to do something else, keep my focus away from it, because otherwise I'm probably prone to making a lot of mistakes. I know myself through years of doing these type of mistakes is I'm prone to do that. We all are. So you have to know your threshold and how far you're willing to push yourself. And a day like today, that was basically the only loss I'm willing to take. It moved against my overall bias and moved against everything I was looking for. So obviously I was wrong. Analytically looking at it, I'm wrong on that. I'm probably prone to making more mistakes because I've taken a loss. So now emotions are involved. So the best thing I can do is just leave the room, leave the PC, the computer, go do something else in my day. If price moves without me, goes to the direct targets I was looking for, it is what it is. There's always going to be another day. I'm sure tomorrow at the silver bullet, there'll be another entry pattern. If I get stopped out again, it is what it is. That's part of trading, right? I know eventually over time that you will be profitable if you follow your risk management and your psychology and your rules. I don't look at things from day-to-day perspective. I look at it from a 6 to a year long perspective, right? We're only in the second month of the year. If you get so solely focused on one day and you look at all this price action, I mean, this is all going to repeat it over and over 100 times more throughout the year. So I'm never worried, and you shouldn't be either. So I know this video is a little bit longer, but hopefully you picked up some gems. Hopefully it was insightful. I will be live tomorrow, 15 minutes before the open for the last day of the week. And until then, good luck in trading, everybody. Peace.